Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to sunny Los Angeles and speak with Mike Maloney of GoldSilver.com, author of Guide to Investing in Gold and Silver. Mike Maloney, welcome back to the Keiser Report.
Thanks. It's great being here, Max.
Okay, let's talk about silver. Last year it was up something like 80%. This year it started off with a bang, up big. Currently going through a bit of a sell-off. What's going on in the silver market, Mike Maloney?
Well, you know, as far as the sell-off goes, I really don't care. Well, actually, I do. I'm hoping silver will go down a little bit more because I want to buy more. I want a lot more. Silver has yet to exceed its 1980 high. I mean, we came within a breath of it, but it hasn't exceeded its 1980 high. Can you name one thing on this planet that is still selling at a discount to its 1980 price?
Right. Okay. Now, I'm looking at the U.S. dollar, and of course, silver and gold are the contra indicators of the dollar, and the dollar is still trading almost at an all-time low, and that trend, even with the Osama spectacle having given it a bit of a boost, it's still trading terribly. How can these two things coexist? The dollar trading at near all-time low with a 20-25% retraction in the price of silver.
Well, they can't exist at the same time indefinitely here. Something has to break. But you know, they're measuring that when you talk about the dollar is trading near lows, that's the dollar trading against other fiat currencies. If you look at what has happened, the dollar measured in gold or the dollar measured in silver for the past decade, the dollar is just crashing. It is burning and crashing. And this will continue. You know, right now we are seeing the euro is beginning to fall apart. The euro is a very poorly designed currency that cannot last. You can't have all these countries with different monetary policies sharing one central bank and expect the currency to last. As far as the dollar is on death's doorstep also. People don't realize that every 30 to 40 years, the world has a new monetary system. We had the classical gold standard till World War I, the gold exchange standard between the wars, the Bretton Woods system from 1944 to 71, and now we have had the dollar standard for the last 40 years. It's on its last legs too. No man-made monetary system can account for all of the forces in the free market. They eventually build up all of this pressure, become unstable, and then stress cracks start to show. That's what we're seeing now. The reflection of gold and silver prices is just a reflection of loss of confidence in the U.S. dollar. And, you know, Ben Bernanke is pretty much committed to sacrificing the U.S. dollar to try to save the economy, which will crash the economy if the, I mean, it's a catch-22. And Alan Greenspan really left him painted into a corner. There's really, he has no good options. And, you know, the dollar's doomed. Gold is going to go to infinity, so will silver. So measuring gold and silver in dollars is really, I think, idiotic. I measure it in how much stuff it purchases, and it's not purchasing near enough stuff yet. It isn't anywhere near a bubble. Anybody that says that gold and silver are high right now, they don't know what they're talking about.
All right, now let's talk about the CME and COMEX. The CME is in oversight for commodity trading. They have selectively singled out silver versus other commodities, and they've been successively raising margin requirements 4 times or 5 times in the past week, 2 weeks, 3 weeks. And of course, this is putting incredible pressure on anyone who has the silver in a margin account. But why selectively are they doing this to silver? And they claim, of course, that it has to do with volatility. But in fact, their actions are creating the volatility. So it's a bit of Orwellian newspeak here, because they're creating the volatility by mucking around selectively with the margin rates. And what does the CME have against silver? Is it because they're all financial terrorists and they're in bed with Blythe masters the capo di capo of all the financial terrorists in the world?
Yeah, well, you know, silver is one of the precious metals. It is money, just like gold. People don't realize that the currencies that we use today, there's no country on the planet that uses money. We all use currencies. Currency has to be a medium of exchange, a unit of account. It's got to be portable, durable, divisible, and something called fungible, which means each unit is interchangeable. They're all the same. A dollar in my pocket buys the same amount as a dollar in your pocket. Money has to be all of those things plus a store of value over long periods of time. The U.S. dollar does not qualify as money. This thing about manipulating silver and changing margin requirements, this is nothing new. It has happened before. If you go back to '79, you'll see that, you know, the Hunt brothers, people say to me, you know, when I talk about silver is still selling below 50 bucks, it's 1980 high, they go, oh yeah, that's when the Hunt brothers tried to corner the market and drove the price of silver up to 50 bucks. The Hunt brothers were the sacrificial lambs to save the U.S. dollar back in 1980. Silver was in a runaway, and so was gold. And when gold and silver are in a runaway, it means that the death of the currency is right around the corner. And something had to be done. And they raised margin requirements several times. You know, the Hunt brothers originally, when they first started getting into silver, they took delivery of physical silver, and they actually got it out of the U.S. They flew it to Switzerland. But then they sort of got charmed by margin. Margin works well when things are going up, but people don't realize that margin is a professional's game. Margin gets duller and duller on the way up, but sharper and sharper on the way down. You have to study the way that margin works. As an investment goes up, you're paying off your margin. You're gaining more and more equity, so you're leveraged less and less as you win. But when you start to lose, you get leveraged more and more and more on the way down. The Hunt brothers got charmed into going out on futures contracts and using leverage, and that was one of their big downfalls. They were actually worried about the dollar collapsing. They were really silver investors. They weren't speculators. They were investors that were protecting themselves from the stupidity of the Federal Reserve and the U.S. government. I just wrote an article on this. I can't believe that hundreds of thousands of people have read about the Hunt brothers and haven't come to the exact same conclusion, that the Hunt brothers were used as the sacrificial lambs to save the U.S. dollar. They raised margin requirements over and over again, and then they put in position limits, and then they finally put in something called liquidation orders only, meaning you can't open a new futures contract, you can only close out old ones. That's the same thing as saying, until this rule is lifted, there will be no new buyers. That's the same thing as saying, until this rule is lifted, the price of silver has to go down. And later, during the trials for the Hunt brothers, it was exposed that many of the board of directors of the Commodities Exchange were short silver. So for every dollar that the Hunt brothers were making, these guys, it was coming out of the pockets of the board of directors of the Commodities Exchange. And so they put in this liquidation orders only. Silver peaked at 50 bucks, and coincidentally, that same day, gold peaked at 850. I don't think it was coincidence. I think traders that had large positions in silver and gold said, well, if they can do this to silver, gold is going to be next. And they started selling. I think the floor traders on the Commodities Exchange, that the silver pit, those guys, you know, they got burned. And then the gold guys found out about it and said, we better sell. So I believe that this has, you know, I see that this has all happened before, all of this manipulation. However, this time it isn't a few large investors. This time it's the masses rushing in. This time it's a bazillion small investors buying silver. And here's one thing. The precious metals always, always win. In the end, they do an accounting of the currency supply. This is one of the major themes of my book, is how throughout history a country has so much gold and silver, and then they come out with a currency that gold and silver is measured in. a national currency, and they expand the currency supply, and gold and silver lay in wait. And then suddenly, people lose confidence in this currency, and they start bidding the price of the gold and silver up until the gold and silver rises to meet or exceed the value of the currency supply in that country. This has been happening actually since the year 407 BC with the first great inflation in Athens. And it'll continue to happen. It's just natural.
All right, you mentioned gold there a second ago, and of course the two trade in tandem for the most part. I noticed that central banks are buying gold. I think I just saw a news story that Mexico is buying 100 tons of gold, which is quite a large piece of gold. China's out there shopping for thousands of tons of gold. And what about China? China, of course, buying all this gold, but are they also interested in possibly buying silver? And before I also want to mention that in Mexico, of course, there's a movement to bring back a silver-backed currency to trade alongside the peso, the paper peso. And so there's a movement there to go to a hard money standard, as is the case in some states in the United States, plus other countries trying to get back to a hard money standard. But talk about Mexico and China. Mexico, what you see there, and China, are they also interested in silver on top of buying gold? Mike Maloney.
The countries that are trying to go back to hard money standards, it isn't their central bank that is doing this. The central banks are fighting this tooth and nail. That's usually some independent politicians, or in the case of Mexico, Hugo Salinas Price, for instance, is the originator of the silver movement in Mexico. But when it comes to China and all these other countries that are now net buyers of gold, I just did a video recently called The Game Changer. And if you look at the bull market of the 70s, where gold went up 24 times its original price and silver went up 36 times its original price, the central banks were net sellers. On the average, central banks sold more into the market than they were buying. When they sell into the market, that depresses the price, and still gold exploded and went up 24 times its original price, silver 36. This time, just for the past couple of years, central banks have become net buyers, and a whole lot of the buying is actually off the books. So the net buying is a lot bigger than what we can see.
All right, good point. Mike Maloney, thanks so much for being on the Keiser Report. We'll check back with you hopefully soon to catch up on the news. And your website is goldsilver.com. Thanks, Mike, for being on the Keiser Report.
Thank you, Max.
All right.